The Forex market, a captivating financial theater where currencies waltz to the rhythm of global economic pulses, can be an exhilarating yet perilous landscape. To successfully navigate this constantly shifting terrain, traders often employ a repertoire of strategies. Let's delve into some prominent ones. Riding the trend. Subscribing to the philosophy that the trend is your friend. This approach involves discerning the predominant direction of an asset's movement, upwards or downwards, and placing trades accordingly. Traders relish in the consistency of the trend, capitalizing on its predictability. Swing trading. Aiming to profit from short to medium-term price movements, swing traders meticulously monitor technical indicators and chart patterns. This strategy, akin to riding the financial wave, often unfolds over a few days to weeks. Scalping the market. The hyperactive cousin of day trading, scalping involves profiting from minute price changes. Scalpers, conducting numerous trades daily, leverage the cumulation of these small victories into substantial gains. Breakout trading. This strategy hinges on the principle of price transitions, either ascending above resistance or descending below support. Traders patiently lie in wait for the price breakout, subsequently placing their trades in the direction of the emerging trend. Carrying the trade. Here, traders exploit differences in currency interest rates. They borrow in a low interest rate currency and use it to purchase a currency yielding higher interest. The interest rate differential forms the trader's profit. In the golden realm of automated trading, bots such as Money can prove to be invaluable tools. Equipped with sophisticated algorithms, these bots play several roles. Automated execution. Bots act as your personal trading assistants, executing trades based on their algorithms, freeing you from the constraints of manual trading. 24/7 market presence. While humans require rest, bots don't. Their capacity to operate round the clock ensures you never miss a potentially lucrative trade. Emotionless trading. Bots, devoid of emotions, make calculated decisions based purely on market data and their algorithms, eliminating the pitfalls of emotionally influenced trading decisions. Backtesting capabilities. Many bots offer the feature of backtesting, analyzing how a trading strategy would have performed in the past using historical data, a critical component in refining trading strategies. However, it's crucial to remember that using a trading bot is not a golden ticket to guaranteed profits. Trading, inherently risky, requires caution and only investing what you can afford to lose. It's advisable to thoroughly comprehend the bot's functionalities before setting it to task. After all, successful trading is not just about strategy, but also about control and informed decision-making.